Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Crowdstrike Holdings. With the just reported deepening relationship with Amazon Web Services, can Crowdstrike strike a home run over the next year? Well, let's find out together. I'm going to go over a summary of the company, product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing. Hit that notification bell if you like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So Crowdstrike Holdings provides cloud delivered solutions for endpoint and cloud workload protection in the United States, Australia, Germany, India, Israel, Romania, and the United Kingdom. It offers 19 cloud modules on its Falcon platform through a software as a service subscription based model that covers various security markets such as a corporate workload security, security and vulnerability management, managed security services, IT operations management, threat intelligence services, identity protection, and log management. Now, the company primarily sells its platform and cloud modules through its direct sales team. Now, let's look at some of the news. Crowdstrike just announced a deepened relationship with Amazon Web Services, where a few security modules already on Crowdstrike's cloud-native platform now work for joint customers of Crowdstrike and AWS. These features will work with AWS services to further protect customers from growing ransomware threats and increasingly complex cyber attacks. Now, the new and enhanced features provide collaborative customers with comprehensive visibility, dynamic scale, automation, and flexibility to better prevent, detect, and respond to threats in the cloud across endpoints. Now, this should increase Crowdstrike's revenues in the long term by basically attracting more customers and retaining their current customers. So let's go ahead and look at some of the fundamentals of the company. So the current stock price is $287.50 a share with a market capitalization of a whopping $65.5 billion. Now, revenues so far this year have been about $1.13 billion with a negative earnings of $186 million. Expected revenue by the end of 2021 should be about $1.4 billion with a negative $216 million in earnings. Now, revenues are expected to increase over the next few years to about $2.58 billion by the end of 2023, but still have negative earnings around $78 million, then expected to break even with earnings in 2024. Now, Crowdstrike is forecast to become profitable over the next 3.5 years, which is considered above average market growth. But currently, Crowdstrike is unprofitable and losses have been increasing over the past 5 years. Crowdstrike's short-term assets of $2.3 billion, though, do exceed both its short-term and long-term liabilities. Their debt-to-equity ratio of 81% is considered high, though. While it's unprofitable, Crowdstrike has sufficient cash runway for more than 3 years if it maintains its current positive free cash flow levels. Now, it is also important to note that insiders have only been selling shares over the past 12 months, and shareholders have been diluted in the past year, with the total shares outstanding growing by about 4%. So let's look at some of the valuation analysis. Now, the most appropriate valuation measure for Crowdstrike is the price to sales ratio. Now, the price to book ratio is excluded since it most likely underestimates the company's book value by overlooking hidden assets such as intellectual property, while the PE and the PEG ratio is not meaningful right now. Therefore, Crowdstrike seems highly valued with the price to sales ratio of 47 times, one of the highest in the software industry. Now, although losing money on an operating basis, looking at the profitability analysis, Crowdstrike has typical profitability characteristics for a company in the software industry. Now, while it does a better median job of converting revenues to profits on a gross margin basis, its operating and net margins are the only on par with the industry norms. Now, looking at growth rates analysis, it saw earnings decline in spite of positive revenue growth during the past 12 months. Additionally, the average company in the software industry has been able to improve its earnings result over the same period. And finally, looking at the financial strength analysis, Crowdstrike's debt to total capital ratio at 44% is in line with the software industry's norm despite its increase over the last year. Now, the company may have difficulty in making interest payments. Its interest coverage ratio of 7 times is among the highest in the industry, but shows that earnings from day-to-day activities are too small to service the debt. So what do analysts say about this? And I'm going to bring it back over here. Now, the analyst consensus right now, it's a strong buy with an average target of $300 a share with a high of $340 and as low as $280 a share over the next year. And it's right on line with that with its current price. Now, going over a few of the analyst reports. Now, the Street Quant Ratings has a sell recommendation on this company. It's driven by a few notable weaknesses. Now, they believe that it should have a greater impact than any of the strengths and could make it more difficult for investors to achieve positive results compared to most of the stocks that they cover. Now, the company's weaknesses can be seen in multiple of areas such as a deteriorating net income and its disappointing return on equity. Now, the new construction report recommends investors avoid CrowdStrike. They have an unattractive rating, which means the stock has more downside risk than any upside potential, and they're looking strictly at the fundamentals alone, the current fundamentals. So my buy, hold, or sell recommendation on Crowdstrike Holdings, here are my thoughts. Now, Crowdstrike Holdings is a large cap growth stock with lots of potential. It is fundamentally so-so company right now that isn't profitable, but over the next few years, it should be. With the announced deepened relationship with AWS, investors should feel more optimistic that Crowdstrike could pick up some new customers or at a minimum expand on existing customer relationships. Now, the gamble here comes if you can believe that the company can grow at double-digit percentages. Currently, with a $65 billion market capitalization and a staggering 40 times sales, that's kind of high. So I believe Crowdstrike is poised for continued growth, and I am a long-term bull on Crowdstrike. I would hold off on buying into Crowdstrike until the next dip, though. Remember, sell on the news, buy on the dip. The news is a long-term play with AWS. I would target an entry price of around $270 to $275 a share. And also remember that I put Crowdstrike as a company that will outperform the market in inflationary times, or should. Now, the growing sophistication of cyber attacks and rapidly evolving threat landscape has fostered the cybersecurity industry's growth over the last year. Now, companies and governments are making hefty investments to strengthen their security infrastructures and reform their security strategies to prevent potential data breaches, where Crowdstrike is poised for a lot of growth over the next 3 to 5 years. Now, there is some downside risk, though, to my bearish opinion on Crowdstrike. Now, if the company cannot keep growing in double-digit percentages, but there's nothing on my radar that tells me there shouldn't be smooth times ahead. Well, not completely smooth, a little bit of rocky, but as long as they maintain their current growth numbers, they'll be okay. I would target a share price of around $315 to $320 over the next year. Now, so there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing. Hit that notification bell if you like your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.